Hi there, guys, and welcome to this special weekend episode of the Cryptoverse. The Cryptoverse is your regular dose of news and commentary on Bitcoin, cryptocurrencies, and blockchains. My name is Chris Coney, and I'm the host of the Cryptoverse and the founder of cryptoversity.com, which is the online school where you set the price to learn about Bitcoin, cryptocurrencies, and blockchains. You can find out more at cryptoversity.com. On the podcast page on Cryptoversity, you can subscribe on iTunes, Stitcher, the Google Play Store, YouTube, and Steemit. You can also use Steemit to support the Cryptoverse by upvoting this episode on Steemit. If you'd like to contribute some Bitcoin, you can do so on that page as well. I always seem to trip over that word when I say upvote. Upvote. It seems like a funny movement of the mouth. That's what she said. Today is a Sunday episode of the Cryptoverse, so it's a special slow edition of the Cryptoverse. So I'm going to be talking slower. It's going to take me longer to read the article. So if you don't like that kind of thing, then just forewarning, that's how it's going to go down today. I'm also sat down today, which normally I'm stood up when I record the Cryptoverse, so that will probably have a completely different effect on me, and the fact that it's a Sunday. So let's see what we've got in the markets today. Wow, quite a lot of red. Ethereum Classic up 10% in the last 24 hours. Still more trading volume than the main Ethereum coin. Steam has shaved 9% from Saturday to Sunday. That's quite interesting, isn't it? Makes a Steam token worth $2.22. Ethereum Classic token is $1.79. Anybody else in the double digits? Nope. Everybody else is just bimbling along. Okay. Quick check of the old Bitcoin price chart. Oh my goodness. Why doesn't that show up on CoinMarketCap? Bitcoin down 3.2%, which is quite a lot for Bitcoin. You know what I was saying over the last few days about some people call it a penta, but I call it a symmetrical triangle. And there might be a difference, so, correct me if I'm wrong. But anyway, I said within the next sort of 3 to 5 days, there would be a breakout one way or another. That breakout has happened today, by the looks of things. Let me get my crosshair. And was it today? Yeah, it is today. It's today's candle. Down 3.46% according to Bitstamp, and it's broke out to the downside. How very interesting. Very interesting. So it's stuck. It's gone down from whatever the price was. It's gone down from what did it open at today? 654. And has gone down to a low of 630, which is one of my Fibonacci retracement lines. So that's acting as support. Okay, this is fine. I'm going to leave my triangle there, just in case it comes back up. It's pretty much done for now, but I will delete it maybe tomorrow or the next day. Now, for today's special slow Sunday edition of the Cryptoverse, I'm going to go through this article from CoinDesk. And it's called Ethereums Explained. There seems to be a lot of confusion around this, so rather than just reporting on all of the drama, let's look at an objective view of what's actually happening. So let's get into it. What started as an attempt to rescue investor funds in a high-profile project has resulted in a schism that has effectively split the community on the second largest public blockchain. This split is not only psychological. Thanks to the design of public blockchain systems, it is also technical, with competing visions manifesting into very real blockchains, or versions of the project's transaction history. As of this weekend, there are now two groups working on two competing versions of a project called Ethereum, a blockchain-based platform designed to enable decentralized application development. If Bitcoin envisioned how a distributed group of users could create and manage a currency, Ethereum sought to allow a distributed group of users to create and manage a decentralized, uncensorable app store. You can learn more in our latest CoinDesk research report. And then, because this article is on CoinDesk, it leads to coindesk.com/research/understanding-Ethereum-report. So you can check that out if you wish. The article goes on. However, there are now two slightly different versions of this platform available to users. Ethereum, the official version of the blockchain maintained by its original developers, and Ethereum Classic, an alternative blockchain maintained by a wholly new team. Both offer the same technology platform, and according to developers, they're in agreement on a formal roadmap for steps forward. But the small differences have created two markets, both with a combined value of roughly $1.2 billion. How did we get here? Well, let's start with the DAO. Long the most notable Ethereum project, the DAO, short for Distributed Autonomous Organization, raised $150 million in Ether, the cryptocurrency of the Ethereum network, earlier this year during a public crowd sale. Held online, anyone who had Ether could participate. The idea was simple. In theory, investors would send money to the DAO and received voting tokens. And then those who invested and voted would decide democratically how the DAO should disperse those funds. Just as votes were starting to be held, however, the DAO was hacked, attacked, or otherwise compromised, depending on your point of view. To some in the academic community, the early problems were obvious, and debates about their severity had already begun. But this all came to a halt when an individual or individuals used a valid action in the code to withdraw the funds to another DAO he or she controlled. To the Ethereum platform, the action was valid to the extent it was able to be executed according to the contract terms. To others who invested, it was much more a contentious action. Skipping ahead, the Ethereum community eventually held a vote, with the majority of participants agreeing that they wanted to change Ethereum's code to get the funds back to investors and away from the attacker. Enter Ethereum Classic. What happened next is that a small minority disagreed with the choice and then took action. While the majority argued that blockchains can and should be altered if enough people agree, other developers asserted that in order to provide a sound history, a blockchain has to be censorship resistant and free from tampering. So instead of making the switch when Ethereum created an entirely new blockchain, the vocal minority continued to mine the old version of the blockchain. Effectively, Ethereum Classic is a parallel version of the blockchain where funds were never returned to Ether owners who lost funds in the demise of the DAO. Ethereum, by contrast, is a blockchain that has moved those funds to another address. But this seemingly small disagreement had an outsized impact. Ethereum Foundation responded to the DAO debacle in the worst possible way, reads the Ethereum Classic's website, and explains further, quote, "We believe in the original version of Ethereum as a world computer you can't shut down running irreversible smart contracts." Close quote. Project organizers followed up with a crypto manifesto outlining the rules that blockchains are supposed to follow in their eyes, including openness and perhaps more vitally, immutability. The idea that once a transaction is made, in this case a hack, they shouldn't be reversed. Not all blockchains are created equal, it reads. And by staying on the unchanged version of Ethereum, they're preserving these values. Who's involved in Ethereum Classic? The Ethereum Classic team currently has 4 developers, according to its lead organizer named Arvico, who won't reveal his identity. But theoretically, anyone can join. Just like Ethereum itself, Ethereum Classic is supported by an open source community. A number of notable developers have also voiced an interest in helping the Ethereum Classic project, including early Ethereum CEO Charles Hodgkinson, who left the team in 2014 over differences detailed here. Then CoinDesk links to an article, Former Ethereum CEO Foundation Not Gotten Involved DAO Crisis. Oh, that's the link anyway. I'm sure that there's a more grammatically correct title to that, but you can check that out. What's important to note, though, is the blockchain is not merely being supported for ideological reasons. A growing number of Ethereum miners have devoted computational power towards the classic blockchain, seemingly because they see a value in securing its transactions and winning the associated mining rewards. At press time, the hash rate for the network was 544 gigahashes, or about 13% of the Ethereum network's hashing power. An arguably impressive figure, given the blockchain has only been around for a matter of days. Now, there's a possibility this next heading is written this way on purpose. The heading is, why is profitable? Which could be lol speak, but it could not. I doubt they've put that in there on purpose. But so why is profitable? The question of what gives classic ethers, ETC, their value is still up for debate. But in short, it has value because people believe in the project, and those interested in supporting it can invest in or speculate on the market now that it's listed on exchanges. Since Ethereum Classic is essentially a clone of the original digital currency, Ether holders can now make money by making an account on the Ethereum Classic version of the blockchain and duplicating their balance. As Ethereum Classic is a replica of the original blockchain, except for a few key changes regarding the DAO transaction reversals, everyone who had tokens on Ethereum at the time of the fork now has the same amount of tokens on Ethereum Classic. To traders, this is essentially free money. If you owned $100 of Ether at the time of the fork, when it was worth roughly $12, you'd have about 8 ETH, which means you now have 8 ETC, or an extra $16. However, those who held more Ether now have a lot more free money. This has since caused problems for exchanges, as even if they don't want to list classic Ether tokens, they're arguably holding what could be called customer funds anyway, simply by processing Ether at the time of the split. But major exchanges have picked up the alternative Ethereum coin, so it's now possible to trade Ethereum for classic Ethereum. Poloniex, an Ethereum exchange, was the first. Kraken, Shapeshift, and Bitfinex followed shortly after, meaning most of the exchanges that support Ethereum now support Ethereum Classic. There's also been the opportunity for profiting by switching between currencies, and one startup founder has even wondered if this is a new way to double spend currency, a problem that the Bitcoin blockchain was designed to solve as it doesn't require a central authority. Who's impacted? Ethereum token holders on both blockchains could be affected by replay attacks if they don't properly separate their addresses to differentiate them on each blockchain, which looks like a complicated process for each individual user to follow. Since, again, much of Ethereum Classic is the same as the old network, most users with a balance on one of them can use it on the other. But this could theoretically result in some funny mistakes, like unintentionally moving funds on one of the other networks. Poloniex has decided to automatically take precautions for its users, and Ethereum creator Vitalik Buterin suggested that Ethereum Classic update its code to solve the problem. What does this have to do with Bitcoin? Speaking of important takeaways, whatever happens with Classic is new insight that might be used in Bitcoin. The debate around expanding Bitcoin's block size, a technical upward bound on the size of transactions that a network can support, might not seem relevant to the split, but it is. One point Bitcoin core developers continued to argue during the long-standing debate was that contentious hard forks are dangerous and can have unexpected consequences, such as splitting a blockchain into two competing blockchains. Many in the community, for example, BitPay co-founder and CEO Stephen Pear, thinks that Ethereum Classic's sudden popularity shows that these were valid concerns. And that's absolutely true. This is me commenting now, guys. Whenever we face a hard fork in any cryptocurrency, the assumption is that it'll be over pretty quickly, because the longest chain becomes the dominant chain, and then everyone on the other chain, just put through economic incentives, decides to join the majority. Unless they don't, right? And Ethereum is the first example where the minority has stubbornly stuck to their guns and decided not to join the major chain, which is interesting. And it seems that the technology allows that perfectly. And as long as that minority chain can maintain profitability, well, they can sustain themselves as an alternative currency. The trouble is, it's both called Ethereum. It's based on very similar technology. I mean, almost identical, but for a tiny bit of code. And then, like this article is saying, it creates all kinds of confusions for users and quite legitimate technical mistakes, which even competent users could make because the two are so similar. So according to the debate, adding to the debate, is that Ethereum's hard fork was immediately branded as a success by many Ethereum developers and others in the Bitcoin industry. For example, Coinbase CEO Brian Armstrong tweeted that they are not something to be feared that results in multiple coins. Oops. Which obviously is the direct opposite of what he said. But this analysis might have been premature, and he indicated as much in a new blog post. And then it links out to that. In a weird twist, some Bitcoin developers appear to support Ethereum Classic for this very reason. If also to demonstrate what the potential risks of switching to a new blockchain in order to update the codebase without consensus. Hang on, I read that, it didn't make sense to me. In a weird twist, some Bitcoin developers appear to support Ethereum Classic for this very reason, if also to demonstrate what the potential risk of switching to a new blockchain in order to update the codebase without consensus. Right. Yeah, update the codebase without consensus. That's why the Ethereum hard fork is kind of contentious. Yes, very interesting. Because in the blockchain world, you vote by installing software and running a particular version of it, right? Because blockchain protocols at their base are their governance models. So the code becomes the government. They set out the rules of the laws of the land and all that kind of stuff. And instead of going and voting in an election to vote in a political party, you run a particular version of the code to say, this is the governance model that I would like to be ruled under. So yeah, it's interesting, isn't it? So, well, because anyone could do that at any time, though. There's still people running Bitcoin Classic, Bitcoin Unlimited, Bitcoin XT, and the network hard forks when there's a given majority of people running it. There's enough support to create an alternative chain. Well, specifically, the miners, because they're the ones creating the blocks. So if enough of those can build blocks in an alternative direction, then a fork appears. And when that happens is determined by the code itself. So if you look at the code for Bitcoin Unlimited or any of those other alternative clients, there's a particular point where they'll decide to break away when they have a given level of support. So the article goes on. What does this mean for Ethereum? The attention currently on Ethereum Classic could fizzle out, or it might not. Taking Bitcoin Classic as an example, the Bitcoin Classic subreddit is still active, even if it never replaced Bitcoin as its engineers intended. There could be two Ethereums that continue to develop along paths into the future. For now, one of them has the same functionality that Ethereum is supposed to deliver, mainly smart contracts that help to construct versions of Twitter that are safe from censorship and decentralized autonomous organizations. But it's both cheaper and more of a hassle to use without an ecosystem of developer tools built around it. Okay, yeah, so they're talking about like you could build Twitter on the Ethereum network because it's a decentralized app. There's no one to delete tweets or ban users like there's been happening with Twitter. The article goes on. Ethereum itself is also impacted as some users and miners are staying on the old chain, decreasing the number of total users and the network security. Well, that's because, like I said yesterday, because 13% of the miners are mining Ethereum Classic, that's computing power that could be being used to secure the main Ethereum core chain, and it's not. So the Ethereum core chain could be 13% more secure, you could say. So now that it's happened though, the Ethereum Classic exists, the community has tons of questions. These include whether hard forking the blockchain or rewriting the code to reverse transactions without near unanimous consensus is worth the risk. And if Ethereum developers forked again to solve a similar problem, would it split again? Either way, it's not clear if the rise of Ethereum Classic is a bad thing for the technology. The protest blockchain. So they're calling Ethereum Classic. They're referring to it here as the protest blockchain. So the protest blockchain gave the minority a chance to build their own system, and some people think it's an exciting development. What do you think? Share your thoughts below. And that's the end of the article. Let's see. Oh my goodness. There are 56 comments. Let me see if there's any particularly good points. Here's a comment that I would like to verify. This fellow says that the developers bailed themselves out because they had invested large sums of Ethereum into the DAO. Now, I don't know how to substantiate that. The question is, did the Ethereum developers invest large sums of Ethereum into the DAO? Because that's a very, very important question. If they did, and those are the same people who were, deciding or pressing for the hard fork, that creates an enormous conflict of interest. So the Ethereum Foundation, that kind of sounds like, to the fact that it's the foundation, it sounds like a independent, objective, non-profit organization that is working for the best benefit of the Ethereum network, right? And it's very difficult for them to prove that the fact that they were standing to lose money, you're going to have a trouble convincing people that that wasn't a major factor influencing their decision to fork the Ethereum network. Because if they didn't fork it, then they would be going to lose whatever investment they had made in the DAO. And quite frankly, I wouldn't believe them, right? So again, we're assuming I haven't substantiated the claim that the Ethereum developers had large sums of Ethereum invested in the DAO. I'm going to have to verify that. If you can verify that, I would appreciate it. Put a comment in the video on YouTube. But even if they say, oh yes, that wasn't a factor in our decision, it's not true, because literally their brains would know that they were standing to lose money. Right? So on an unconscious level, there is no way that they could be objective, right? But one thing we cannot do as human beings is be purely 100% objective about ourselves, because it's our point of view. So we have no mirror to look back on ourselves, right? Because we're inside ourselves looking out. So unless we jumped out of our own bodies and looked back at ourselves, that would be the only objectivity, which is often why we need other people to help us be objective about ourselves. That's why the coaching industry exists, because you need an external third party to help you be objective about yourself, right? Excuse me. So, yes, that was interesting. So I'd like to verify whether that's true or false. In reality, I like facts to back up whether the Ethereum developers did in fact invest large sums in the DAO. Okay, this fellow here, Bitfreak, he's saying that Ethereum and the DAO are for-profit organizations, and that he knows this because there's some leaked Skype conversation featuring Vitalik Buterin that kind of backs that claim up. Again, I'd like to substantiate that, verify or falsify it somehow, but this guy claims that there's some kind of leaked Skype conversation of Vitalik. He says you will clearly know that they are not operating as a non-profit by action. The term non-profit was used just so that they could collect as much money as possible from the ICO and avoid legal hassles and avoid taxation. Well, okay, that's a big claim, and I would appreciate if we could verify or falsify that using facts, because we're looking for the truth here. So here's a good comment. This fellow. The question I have is, which of the two forks do new investors buy into at this point? It's a crapshoot as to which will take off, and the potential for one to die out is high in my mind. I believe this will stop many people from buying up Ethereum for the interim and might hurt the growth of the currencies until a clear winner is found. It's a good point. It's confusing for a new investor, because you've got two coins with a very similar name. Now it's easily possible that those two coins will continue to exist forever, right? We'll just continue with Ethereum and Ethereum Classic, and they will just both go in their own separate directions, become their own independent cryptocurrency networks, and that'll be it, right? The trouble is they're both called the same thing. That is the biggest problem. That is the biggest problem. Because we know that Dash, for example, Litecoin, and quite a few others, altcoins, are pretty much based on the exact same protocol as Bitcoin, with some additional code to, make them a different coin. But like Litecoin is fundamentally the same as Bitcoin with different block times, which is where it came from. It's not a fundamentally brand new technology like Ethereum, which was written from scratch, or BitShares, which was written from scratch, and works in a completely different way. So, yes. So we could rename Ethereum Classic to something else. But I doubt the community would like that, because if they see themselves as the true Ethereum network, the original, why should they have to give up the name? You know what I mean? Yeah, it's very complicated. It's very complicated. Anyway, we'll see how it pans out. Yeah. So that's going to do it for this weekend slow edition of the Cryptoverse with me, Chris Coney. I would like to thank you very much for listening today. If you'd like to go to cryptoversity.com/podcast, you can subscribe to the Cryptoverse and have it fed straight to you whenever there's a new episode. You can do that on iTunes if you've got an Apple device. You can do it on Stitcher if you've got the Stitcher app. You can do it on the Google Play Store if you've got an Android device. You can just subscribe on YouTube if you've got a smart TV or a Chromecast or the YouTube app on any device. You can also support the Cryptoverse by going to Steam it and clicking on upvote for this episode. Hey, I managed to say upvote without slipping over it. If you'd like to support the Cryptoverse directly, you can contribute some Bitcoin on that page because there's a Bitcoin address there and a QR code so you can sort that out. So please come over to Steam it and make a comment on this episode of the Cryptoverse. I've asked a couple of questions in this episode. If you can help me verify or falsify some of the truth or false statements that people have put forward in the comments, I'd very much appreciate that. If you can help me find out, and I'm talking about hard facts, if we can prove that the Ethereum developers did in fact invest large sums of money in the DAO, then that will help us to. That's information we can keep in the mix when we're deciding what their intention was when they decided to fork the network. You can also check out the main site, which is cryptoverse.com, the online school where you set the price to learn about Bitcoin, cryptocurrencies, and blockchains. That's all for this edition of the Cryptoverse, guys. I've enjoyed speaking to you today, so until the next episode, it's me, Chris Coney, saying bye for now.